Amazing thing, I feel the challenge in AMT MP is people getting lost with so many nomenclatures. Understanding the context takes a bit of time, but then it becomes so powerful that one doesn't require any other indicator. That, see, it happens, like it happens. Jim Dalton always says, I used to not like it. Like, he used to say that once you look at the markets via market profile or auction theory or all those things, you won't look at the markets the same way again. And that is so true. That is so true. Now, no matter what chart is thrown in front of me, I can immediately spot where the struggle areas are, what the buyers are trying to do, what the sellers are trying to do, who's winning, who's doing a poor job, when a reversal can happen. Now, if you ask me whether that can immediately be translated into trades, may not be. I'm not claiming that, okay, I can take a trade anytime I go to the markets. No, even I struggle sometimes because I'm a human being, right? I'm not a robot, or also I'm not at the level of Jim. But the point here is that, let's say I make a mistake in analyzing the charts. That mistake, I can go back and analyze, like, what mistake I made, why I thought this, and why the market did this. I can get a very specific answer from that. And the beauty of it is that most of the times that answer is very consistent across time periods, across asset classes, across chart periodicities also. Like, if I'm tracking volume profile on a weekly chart, yearly volume profile gives me the same kind of observations and logic if I'm looking at an intraday volume profile. So it's fractal. All right. Now, if this kind of activity you keep doing, like, you keep making mistakes, it's all right. Keep your risk small, afford a lot of mistakes, make mistakes. But if your method or framework or whatever you are using is not letting you learn from the mistake, what is the point of all that? How will you improve as a trader? My argument was always that. So I used Elliott wave for a long period of time. I was good at it. I made money, sometimes good money, sometimes I lost money, sometimes I was frustrated, sometimes I was elated, everything. Okay, like a normal person who is trying to trade the markets. And I was becoming good at it also. It's not like I was not good at it. I could never get the answer of why. Like, okay, market fell sharply. Why? Because it was a third wave. I understand. Every time it was a third wave, market fell sharply. Sometimes I could count the waves correctly, sometimes I did not. Fine, I could have improved. But okay, it's a third wave. What does that mean? Like, what does that mean? Why market falls sharply in third waves or fifth waves? There is a explanation given by Robert Prechter about it. He tries to incorporate the macroeconomic principles and all. But when it comes to shorter time frames, sometimes it fails. Sometimes it fails miserably, and it never actually gave me the reason for why things happen. It told me that if this is happening, you will get a big move. Okay, fine, but why? I could never find that answer, and that is what frustrated me regarding Elliott wave. And then when I came across market profile, and then when I actually understood what market profile is all about, I started getting the answer of the whys, and that helped me improve. Like, if I make a mistake today and I really study and analyze it, what went wrong and what the market was saying and what I was not able to comprehend, understand, that same information I can go back and use again next time. I can go again and next time I can use that same information and I can take a correct decision. The day I understood this, I said, okay, this is the thing for me. I'm not never going to leave it. And I am very happy that I stuck around.